Hey, it's downtown Josh Brown. I'm here at the compound with Michael Batnick as always. We're going to play our favorite game. What are your thoughts? Michael doesn't know what I'm going to ask him. I don't know what he's going to ask me. Stick around. Let's see what's going on. Okay, Michael, S&P 2800. We did it. We're back.
We are?
Pretty much. Like that's where we're headed, clearly. So the last, take my word for it.
What do you mean clearly?
What?
That's where we're headed.
How many handles away are we?
20.
All right, just go with me on this.
Right.
We are approaching S&P 2800.
Fair.
So we got turned away here twice. This time, the breadth.
Three times.
Three times. So this time, though, the internals seem to be much better than they were, what was it, September?
Yeah.
And then a year ago, pretty much. So what are your thoughts? Like, is this the real thing? Are there any triple tops in the market?
No, this would be a quadruple top.
I know, but like, how many do you see of those at the index level?
I don't know. This chart that I'm just staring at right now is just
what? It's vertical.
I mean, this really should be humbling. Like,
What, for anyone that thinks they can use yesterday's price action to say what's going to happen next week?
Like, things look pretty freaking dire at the end of December.
Yes. I actually wanted to, and then I also wanted to ask you on the same topic. So on Christmas Eve, there was one stock in the S&P above its 50-day. Why isn't that just an automatic buy everything? It's not that simple?
I would guess that that's a terrible buy signal.
I would love to run. We should run that.
When there's one stock,
like less than 10 stocks in the S&P above a 50-day.
All right, you're probably near a bottom, but it probably gets a lot worse before the bottom.
Or it could.
Yeah.
All right, got it. What do you got?
All right, what do I got is, so I just sold my house or my apartment. I'm buying a house, moving down the block from you.
I know, it's great. We could do the show. We could do the show on the street.
So I was thinking, the real estate broker. So I worked with a buyer's broker. So he was representing the buyers. He works for the buyers.
You didn't have a broker for yourself.
Correct. I was my broker. Okay. He works for the buyers. He works for the buyers. He works for the buyers.
Yeah.
But I'm paying him.
Yeah, you're paying him because he brought buyers to you.
No.
Yes, he did.
Hold on. That would be if I had a broker bringing me buyers.
No.
He kept saying, I work for these people. I work for these people. Then why aren't they paying him?
Because.
Why does the seller pay the buyer's broker and the seller's broker?
Because he brought the buyers to you. That's why.
So what?
All right. What happens?
He works for the buyers, but he gets paid by the seller.
Dude, my mom's a realtor on the North Shore of
Long
Island.
Doesn't mean the system's not bullshit.
Sometimes she represents the buyer and the seller. It doesn't make a difference. Somebody brought the buyer to you. You didn't find the buyer yourself. So you should pay for somebody to bring. Hold
on. So the people buying the house don't pay anything? They just get a professional's help for free?
Listen, you could represent both sides. You could have no broker and hope for somebody to come in.
Why don't people employing the broker pay anything?
It's not always that way.
It pretty much is. It almost always comes out of the seller's pocket.
What happens in a rental situation? The buyer.
I don't know. It seems rigged. All right, what do you got?
I mean, get over it.
Nope.
First of all, you sold in Brooklyn right now in this economy, and you were able to sell your house without using your own broker. What are you upset about?
The system.
Dude, you're like Larry David. You sold your house. You bought a new house. Congratulations. So I wanted to ask you about this concept of what's priced in. Everyone that I'm listening to and reading over the last 2 weeks, the big debate seems to be like if Trump and China make a deal and it's like a real deal, not like a tweet. Like, is that already priced in given the huge rally we've had? And why do people think that they know what's priced in or that their opinion of what's priced in is better than someone else's or representative? Is that just another delusion?
Yes. Well, of course it is. I think that's probably like the go-to statement for what's going on in the market.
The commentariat loves saying,
love it.
This is priced in. This is not yet priced in.
Yeah, as if you know the odds just because a stock has done something. Like you see what's already in the price. You don't know.
Right. So
you find out after the fact.
Right. So when you bet the Super Bowl,
you see the odds.
You see what the odds are. There's nobody publishes the market odds.
So are the odds like a ratio, like the price of earnings or price of sales? I mean, that gives you a sort of a gauge, but it doesn't tell you it doesn't really tell you anything, at least certainly not in the short term. Maybe in the long term, it tells you what the market is expecting.
Right. So I do a TV show and we go around in a semicircle. The China trade resolution is priced in. No, I don't think it's priced in. I think it's partially priced in.
Could something be priced out?
Yeah, it's all priced out. All right, it's to you.
It's to me. Sorry, I don't have this in front of me. All right. Oh, the great Pee Wee Herman once said, "Better to remain silent and thought a fool." Right? You know
And
that
to
line?
open your mouth and remove all doubt?
Yeah, I'm looking at you.
Why?
Joe Flacco is elite. That was a joke, right?
Yeah, it's a joke. See, it's a Barstool joke.
It is?
Yeah. They like
Wait,
they
so
used to
I-
hold
I'm
up
like-
a sign. Joe Flacco is an elite quarter. Is Joe Flacco an elite quarterback? And get on TV with the sign.
Okay, so I'm the meme guy over his head.
Yeah, and aren't you a millennial? You should know that joke. You're a Barstool guy a little bit.
Next.
All right, that was good. I wanted to ask you about the All-Star break, not about the game itself. I just feel like maybe this is just because it's my opinion, but I wanted to see if you share this opinion. Basketball just completely overshadowed the Super Bowl in February. Between the trade deadline and then All-Star break and the way they're now letting these guys pick their own teams, which is a lot of fun, and just the media attention, the Twitter conversation. There were no players in this Super Bowl who were trending on social media. Maybe Brady.
They never will. It's different.
I don't know if it's so. I'm not sure about
It
that.
is different.
Okay.
Well, go ahead. Why are you not so sure about it?
Well, I guess so. Then you disagree with me that like the Super Bowl was still a huge event and everyone cared as much. I felt like this was NBA's month, and they had a break 1 week out of the 4 week. I just felt like that's all everyone was talking about.
I used to be obsessed with All-Star Weekend. I'm not so much anymore.
Right. Did you watch the slam dunk contest?
No, I fell asleep. I saw the.
Serious? But you didn't DVR it?
No.
3-point
I
contest?
said no.
That's like the best part of the whole thing.
Whatever. Anyway, I just think that NBA superstars, because of their social media, the longevity of their career, the contracts, the fact that you could see their face.
Yeah.
Like it's
No
just
helmet.
different.
So all right, so that's my point though.
What's your point?
So you agree? Like it's just a more visible,
yeah.
exciting thing in general.
I mean, NFL superstars have a much shorter shelf life, and it's just not the same.
Okay.
People don't follow NFL players the same way they do NBA players.
They don't. I agree.
I was listening to Patrick O'Shaughnessy's podcast yesterday with this remarkable person, Alex Danko, I think is his last name.
Okay.
And it was just like evident how smart this guy is. But one of the things that they were talking about, I think Patrick said, and maybe I'm butchering this, but the idea was like maybe you should stop looking for the next Amazon because maybe given technology and where we are, that they are just able to do things with diagonal integration and just things that are available to them that just the giant company of the 50s just couldn't do.
So accept that Amazon is the next Amazon?
Well, so I was thinking like all of the lessons of history tell us that these companies, come and go.
Yeah.
But is it different this time? Like, is Amazon going to be Amazon in 20 years or is it going to be replaced by something bigger and better?
It's such a hard question. But it's so important because like Amazon is such an important stock to the market and Amazon's business is so important to the U.S. economy now. They have 674,000 employees. Like they're important.
I mean, you could have said this about American Steel and GE and whatever, but it doesn't it feel different? I mean, I know that sounds so foolish to say because it invites you just looking ridiculous, but what if this is literally just different?
I don't think U.S. Steel like captured their consumer in the way that Amazon can. So it's like it's an apt comparison because of how important they were when they were building out the interstate, highway system and everyone needed steel and they were building all the cities. So it was like very important, but like I don't think U.S. Steel had the same ability to just own a customer the way Amazon does.
Do you think
that could change?
Do you think that if you polled 5,000 market professionals, whatever, that they would say that history shows us that this doesn't last? Like, I think that more people would be on that side.
There is a poll of market professionals on Amazon, and no, they're all
stock market.
Dude, it's a $1 trillion market value on $11 billion in profits. Like that's the market is making the argument that I'm making, which is that there's something very unique about this situation. Doesn't mean forever, but for the moment, like the market has voted.
I'm not talking about like 200 years from now. I'm talking like in 20 years.
I get it. I've heard arguments that there will be another Amazon, but it won't be tech. It'll be something biotech. It'll be like a company that cures all the diseases or lets people rewrite their DNA, and that platform will be more profitable than selling things to
By the way,
consumers.
If Bezos wants to get back into New Yorkers' good graces, just please buy the Knicks.
I think New Yorkers' good graces are an unattainable bar to try to reach. So I wanted to ask you about the buyback tax rate conversation. So dividends are double taxed. If you receive a dividend, the corporation was taxed on that income as a profit, and then they turn it over to you, and you are taxed for receiving the dividend. In the case of a buyback, it's taxed as a profit to the corporation, but then when they return it to you in the form of buying shares and shrinking the float.
So it's a more efficient a more efficient way to give money back to the shareholder.
Is that fair, or life isn't fair and just deal with it? Because Marco Rubio's proposal is to somehow equalize the taxation rates between dividends and buybacks. Can you even do that?
What's the proposal exactly? How would he do that?
I don't know the how. Is it possible? He wants there to be no preferential treatment.
So don't tax dividends?
So I think they were saying let's tax buybacks. I don't think they were saying let's eliminate the dividend tax also.
Who pays the tax on the buybacks? The company?
Nobody. Well, the company pays.
No, I'm saying in this scenario, who would pay the taxes?
The company is paying a tax on their profit.
I don't know.
And then that's it. The holder, like, I don't pay. So Apple shrinks its float, and I don't have to pay for that.
Don't you think that there would be all sorts of unintended consequences if something like this happened?
Yeah,
don't you think the CFOs would be like, okay, now we'll do this?
Okay, we'll do an M&A binge.
Yeah, whatever.
Right, or we'll start offshoring again. Yeah, I agree.
Right, make buybacks dividends again.
Right.
So I sort of ran out of topics, so let's just talk about Wealth Stack.
Okay. Oh, yeah. I guess this would qualify. We announced a new conference in partnership with our friends at Inside ETFs. I think Inside ETFs is the most massive investment conference of the year. These guys are amazing. They know what they're doing. We just had a great time last week. So we're going to do something in September with the Inside ETFs folks, and it's called Wealth Stack. And not to do a commercial, but I think there's room for a conference that addresses both investing and advisor technology all in one shot. I know a lot of conferences dance around both of those two, but I think there's room to do an event that just purely focuses on those two topics and how they relate to each other. So I'm pumped. I know you're super bullish about it.
I am psychotically bullish.
We're gonna have like hundreds of people there. It's gonna be nuts, and I'm definitely gonna get sunburned. All right, that's it from us. If you have any comments on any of the topics we discussed, make sure to go ahead and leave us a comment. If you like what we're doing, go ahead and smash that like button. Subscribe to the channel if you have not yet subscribed, and we will talk to you soon.